Hi there. Today is Wednesday, June 5th. So, yesterday I traded really bad, went completely off process. Today I also traded bad. It was very clear that the only move today was to trade to the upside, and I traded to the downside. I'm realizing that I really need to be stimulated, or I'm seeking out stimulation, and I'm acting that out in the market. So I have self awareness of the problem, and I know that's the first step to fixing it. I know that that problem will start to resolve as I actually follow a process and have confidence in it and go slowly. It's going to take a lot of concentration and mental effort to get to that point. I think once I get like 2, 3, 4 weeks green following a process, I'll be better. I need to focus on taking trades within my style. So, for being a day trader, you can scalp, you can go move to move, you can just hold all day hoping for a trend. And I think I need to be in the middle. I need to go move for move, because that way I can capture a leg of a trend, or even just a smaller move, can capture that, and then on that pause, that at that pause, that's when I can join back in. So I can take profits, let the market pull back, join again on an ABC trend. I think I need to focus on the higher time frames, like really focusing on the hourly to avoid getting so caught up in the 2 minute chart. Just focus on the bigger picture, because I'm trying to capture those 1 hour bars that are big and that will sometimes repeat. I'm not trying to capture the little bullshit that happens in between, and that's what I've been scalping around. So I need to be really cautious about scalping, because I knew today that the up was the only way to go. We were breaking out of a consolidation and we were above prior day high, but I still just tried scalping around, and it made me lose sight of the bigger picture. So it's unfortunate, but realizing it and is the first step to fixing it. So I'm optimistic about where we're going to go from here. Time to dive into the analysis. So the trades I took today, that first candle at about 7:40, I got long because I saw that we were in a pullback, and then I got out right away because I realized I was fighting the force that's moving the market down. I didn't listen to that. I got long again, got stopped out, small short. Then I took another short, and I got out for break even. And then I tried shorting when it actually started turning. And then this is the full move of the day. So, yeah, I missed a big move up because I decided to somehow go short today. But today is a day that definitely should have been long. And the reason for that is just looking at the daily chart in the middle. You can see that we've been consolidating and we're above prior day high. So the only thing you should try today is to go long. And if you get stopped out a couple times going long, well, that sucks, but at least you're like trading with an actual plan. And if you do end up being right, you'll make a lot more on the one you were right than the one or two you got stopped out on. The key is not risking so much that you get that those stop outs really hurt your account. So yeah, I want to do some analysis here and talk about why I took each trade, and just to be like really blunt with myself, I take trades without reasons a lot. And I know that it's bad. I know that random trades are stupid, but I think a problem I have is like stimulation. I want that like dopamine rush, because when I started out, if you go back and look at previous videos, 4 or 5 videos ago, I was a lot more patient. I was waiting for my setups. But as I got wins, these losses, as I got wins, I craved that feeling more and more, and anything that went against that was very painful. I mean, losing money is very painful. So I would do everything in my power to get it back, and my ego would get involved, and I would just overmanage the shit out of my trades. Okay, so let's talk about the price action. And I think a remedy for this is focusing more on the 15-minute chart and the bigger time frames. Because if we look at the 15-minute chart, we can see, okay, there's a lot of wicks on the bottom. It looks like it's going up. We're in an uptrend. I don't need parameters or like complicated rules to follow to just look at the 15-minute chart and say, okay, it's in an uptrend. On the NASDAQ, the ES is selling off a bit more, but that can actually clue us into what the ES is going to do, because the ES typically lags behind and follows the NASDAQ. So if NASDAQ's holding up very high and ES is still falling, it's reasonable to assume that the ES will follow the NASDAQ and turn around and go up. So I think this is a fine time. We don't want to buy it when it's going down. I mean, you could buy when it's going down and just place a stop loss below the lowest pivot. I mean, right there, I could have just bought, and the reason why I would say it's okay to buy is because just looking at the chart, we're obviously in an uptrend. It's being held up. If you look at the 15-minute chart, every one of those dips where the bears try and bring it down, it gets sold way off. So why did I sell out so fast? Because I'm just impulsive and I'm going for dopamine. I think the key is I should have just stayed with that position. I wonder if it would have gone down and hit my stop, because I do use pretty tight stops, but yeah, I guess we're about to find out. So it's starting to look like the NASDAQ wants to creep up. At this point, I'm actually thinking like the wrong part of my brain is thinking like, hey, I think we're going to keep going down, because if you just look at the 5-minute bars on the NASDAQ, it's set lower and lower highs. But it's really just consolidating. It's consolidating above the moving average. We're above the prior day high. So really the only move anyone should be here is bullish. It's silly to be anything other. And I realize that, and you can see me moving my mouse. I think about getting out of this trade early, but I don't. I get stopped out and lose like 3 points or whatever it is. And at that point, when I know like, oh, I think it's going long, that's when you just have to get long. Like, not hesitate. I think a lot of my problem just comes from not following a super simple plan. And it doesn't take data, it just takes patience, and it takes discipline. So yeah, that first one that I got out, I made like $37 on. If I would have just stayed in that, my trade would be 50 points in the money on NASDAQ. And I don't know how, I can't see. My notes are blocking. I'm just changing my notes here. I think I cut it. Yeah. So here, we're still inside the range a bit. I don't know what's going to happen, but I think it's still reasonable to say, okay, this is like a flag pattern. And generally, flag patterns aren't wise inside ranges. But if we back out, we look at the 15-minute or this latest drawdown or the hourly, we realize that what that little pullback was, that is just a flag pattern. So yeah, had I just got long at the very bottom like I did, had I kept my long from the very bottom, this trade would have been very lucrative and I would have made back everything I lost the past couple days by going on tilt. But I simply could not trust myself to make decisions. So this ends the recording of the day. I still want to talk a little bit, so I'm just going to put a screenshot up of the market today and talk about that. So just 1 second. Just want to make sure I'm viewing it when I talk about it. So I had a feeling that I should only go up today, but I couldn't follow that. We're above the prior day high. It's been consolidating. The market set me up today to make my losses back. But I wasn't in the right headspace because all I wanted to do was basically gamble and have stimulation. And some people tell me, like professionals, some will tell me like you need to very clearly define how much it's going to pull back, and that's how you have to follow it. And I think for some people that is wise, but I also have people that tell me that make a lot of money trading the markets that are professional. Don't worry about that. Like, focus just on the big man, keep it simple. And for me, that resonates more with me. And I have proof in my successful days that when I'm doing that and I'm just listening, I'll do very well. The problem is emotions creep in and I make emotional decisions. I'm making trading stimulating, and I'm scalping around bullshit that I shouldn't scalp around or touch. Because if you look at that part at the very beginning of the day, like between 7:30 and 8, there's spikes, okay? It's spiky and it's just not a good place to scalp. I think my focus needs to just be move to move trading. So, set stop loss and take profit at a level and not interfere. Don't touch the trade until it gets to my level. And then at that level, reassess. Maybe there's a pullback. Maybe there's a better chance to get in. If you're in an uptrend, there will be buyers often below the low of the previous bar. So like that flag at around 8:30 to 8:50, every time the candle ticked below the bar, it got bought back up. And then, so buying on the bottom side of that micro range, I think that's good. When I'm how can I make decisions better in the moment? When I'm impulsive, I feel that impulse, I just need to simply not trade. Maybe the impulse is coming on because there is actually a good opportunity, and I just need to ask myself, at the end of the day, when I'm making this video, when I'm doing my review, will this be a good trade? I've made these mistakes a lot, and I've said similar things, and it's still not working. But I know the answer for me isn't to add a bunch of parameters. I really do think for me, it is psychology. It's very trendy nowadays to dismiss psychology and just say it all comes from your plan. All bad psychology issues come from your plan, so you just have to work on your plan. But I know my plan works because of people like Linda Rashke and Adam Grimes and Al Brooks and other market wizards, Stephen Goldstein, Brent Donnelly, Tom Hugard. There's lots of people that don't have that precision yet are still able to make loads of money. And what those people can do is they don't scalp around the bullshit. They focus on the bigger picture. So I just need to focus on the 15-minute and the hourly and listen to that more than the 5-minute. Use the 5-minute for entries, sure, to get in at the right side of the micro range. If we're in an uptrend, buy below the latest candle. If we're in a downtrend, buy above the latest candle. If we're in a range, only play the edge of the range or just don't trade. If it's not, you don't need mathematical analysis. Like a 10-year-old can tell you if we're in an uptrend or a downtrend. There are traders out there who will train their kids, and these kids can trade and make money better than I can. I know it's simple. I know I don't need indicators or precise plans. I just need to be more patient and say, all right, is the market clean or choppy right now? It's choppy, I'm going to wait. Are we above the prior day high or below the prior day low, or are we inside the daily candle? Okay, if we're above, I'm going to go long. If we're below, I'm going to go short. Unless, though, there's some context, because like if we're above the prior day high, but we're in a downtrend, there might be sellers waiting there. So maybe in that case, I think short. So it depends. It depends on what's happening. And I think I just really need to focus on being the type of trader that I want to be, and maybe I haven't defined that enough myself. So, because I don't think I should be a scalper. Yeah, I'm taking a bunch of scalps. If I'm going to be a move-to-move trader, fine, but probably should only take like 3 to 4 trades a day max. Probably should wait for the first 30 minutes to happen if it's a news day like it was today. And today I got thrown off because it seemed bearish at the start and the news seemed to be kind of bearish, but it faked me out, and you have to stick with your thesis. You need confluence. Buying at the bottom, there's not confluence because it looks like we're in a downtrend on the 5-minute. But on the bigger picture, the hourly is looking bullish, the daily is looking extremely bullish, and that is and the 15-minute is looking pretty bullish. So those are what I need to follow. I need to follow the daily because that is what's going to matter more than anything else. And some anti-confluence, the 5-minute being down, but all the others, the higher time frames, are telling me it's going up. That can actually be a gift. It can be a pullback, a greater time for me to buy. I can't get caught up in the scalping if I'm going to be a good trader. Ignoring those urges is really hard because I really just need to focus on like the dopamine, like not clicking the button. Not clicking the button and not taking the scalps is very hard, but it's like what I need to do to be a good trader. And I don't know how I get to that point where I'm not susceptible to that. Maybe it's like exposure therapy and doing breathing exercises. I'm not sure, but if I'm going to be a measured move to move trader, just need to be patient. anyways, we'll end the video there. But yeah, tough day. I feel a lot more hopeful than I did yesterday, even though I messed up today. I think it's hard to make good decisions today after a day like yesterday. So it sucks, but I know from the professionals I talk to that like this is kind of like the last thing to figure out. Like learning to actually sit on my hands and not overtrade and letting those impulses go. I think that once I figure that out, I mean, I'm very hopeful for myself, and it sucks that I've lost this much money so far and I'm in the hole that I'm in. But I know once I figure it out, I'll eventually dig myself out of that hole. I'm young. Yeah. I appreciate you watching. I hope that you can, leave some feedback for me because I'd appreciate advice. Thank you very much, and have a good one. Bye.